In this video, I'm going to share with you why Capitaland Ascott Trust, CLAS, is a hidden gem in the Singapore stock market and how it could potentially boost your investment portfolio. Let's dive into the world of hospitality real estate and uncover why CLAS might be your ticket to steady income and growth. Hey friends, welcome back to the Investing Iguana channel. I'm Iggy, your go-to guy for all things stocks, finance, and wealth building in Singapore and beyond. Today, we're going to explore a REIT that's been making waves in the hospitality sector. Capitaland Ascott Trust, or CLAS, has recently hit a 52-week high, and there's a good reason for the excitement. The Federal Reserve has finally cut interest rates by 50 basis points, which is big news for real estate investment trusts like CLAS. But before we get into the nitty-gritty, let's start with the basics. CLAS is the largest lodging trust in Asia Pacific, boasting an impressive asset value of SGD 8.5 billion as of June 30th, 2024. Their primary focus? Investing in income-producing real estate and real estate-related assets in the hospitality sector. We are talking about a diverse portfolio that includes service residences, rental housing, student accommodation, and other hospitality assets worldwide. Now let's talk numbers. CLAS owns a staggering 102 properties with more than 18,000 units spread across 45 cities in 16 countries. Now, these aren't just any run-of-the-mill properties. We're talking about well-known brands like the Ascott, Somerset, Quest, and Citadines. These names are synonymous with quality accommodation, providing guests with a true home-away-from-home experience. You'll find CLAS properties in some of the world's most vibrant cities. Think Barcelona, Berlin, London, New York, Tokyo, and of course right here in Singapore. Speaking of which, CLAS owns some prime real estate in our Lion City, including the Ascott Orchard and Somerset Land Court. Now, you might be wondering who's pulling the strings behind CLAS. Well, it's a wholly owned subsidiary of Capitaland Investment, a leading global real estate investment manager with a strong foothold in Asia. But here's where it gets even more interesting. The largest shareholder in CLAS is none other than Temasek Holdings, with a substantial 30.99% stake. That's some serious backing. Let's dive into the financials, shall we? In the first half of 2024, CLAS increased its gross profit by an impressive 12% year-on-year, reaching SGD 172.9 million. Revenue also saw a healthy rise of 11%, hitting SGD 386.4 million. This growth isn't just a fluke. It's the result of sustained lodging demand and stronger operating performance across their portfolio. As international travel continues its post-pandemic rebound, CLAS is reaping the benefits. Their revenue per available unit, RevPAR, for the first half of 2024 grew 5% to SGD 145 compared to the same period in 2023. For the second quarter alone, RevPAR jumped by 4% year-on-year to SGD 155. Here's the kicker. This actually exceeds pre-pandemic levels, sitting at 102% of Q2 2019 RevPAR. Japan and the USA are leading this charge with higher room rates, showing the strength of CLAS's diverse geographical presence. Now let's talk about the financial health of CLAS, because this is where it gets really interesting for potential investors. Their gearing ratio stands at 37.2%, which is well below the 50% limit set by the Monetary Authority of Singapore, MAS. This means they have plenty of room to take on more debt if needed for future growth opportunities. Their average cost of debt is impressively low at 3% per annum and is expected to stay stable through the end of 2024. Why? Because 82% of their debt is on fixed rates, and their weighted average debt to maturity is a comfortable 3.6 years. Their interest cover is also healthy at 3.7 times, indicating strong ability to meet interest payments. For income-focused investors, here's something to get excited about. CLAS paid a distribution per unit, DPU, of 2.55 cents for the first half of 2024. The current DPU yield stands at an attractive 5.79%. These distributions are paid twice a year, with the latest one hitting investors' accounts on August 29, 2024. In a low interest rate environment, this kind of yield is nothing to sneeze at. Performance-wise, CLAS has been showing some positive momentum recently. It's up 1.5% on Thursday and has risen 5.4% in the last 5 days. However, it's important to note that it's still down 1.5% year-to-date and was down 1.5% in 2023. But here's where it gets exciting. It's when our financial analysts are bullish on CLAS with a buy rating. Their target prices range from a high of SGD 1.37 to a low of SGD 1.04, suggesting significant upside potential from the current price. The recent rate cuts in the US and Eurozone are positive catalysts for CLAS. As someone who's been holding CLAS since 2021, I'm impressed with how well managed this REIT is. It has a strong sponsor in Capitaland Invest. It's consistently profitable, and it has a solid balance sheet that can weather economic storms. One of the best parts of owning CLAS, the juicy dividends I receive twice a year. The current dividend yield of 5.79% beats putting money in Singapore, fixed deposits or treasury bills by a wide margin. Plus, I get the potential for capital growth as CLAS continues to expand its portfolio of quality lodging properties globally. It's a win-win situation. At the last closing price of SGD 0.98 per share as of September 2024, I believe Capitaland Ascott Trust is undervalued and has significant upside potential. Here's why. Global tourism expenditure is projected to reach a staggering USD 2 trillion in 2024, and the hotel and lodging industry is a big part of that pie. CLAS is in a prime position to benefit from this robust global demand. Let's zoom out and look at the bigger picture. The global hotel industry is defying broader economic trends and soaring to a full recovery. According to JLL's Global Hotel Investment Outlook 2024, by November 2023, RevPAR had reached impressive levels ranging from 94% to 121% of 2019 levels across regions, with the Middle East, Europe, and the Americas leading the way, while Asia Pacific, APAC, is still working towards full recovery. Positive performance trends indicate that RevPAR is expected to surpass 2019 levels by the first quarter of 2024. Notably, resort and leisure-heavy markets rebounded swiftly, while urban markets experienced an acceleration in performance as business, group, and international travel gradually bounced back. In the year ahead, urban hotels, particularly in London, New York, and Tokyo, are anticipated to generate substantial investor interest. This trend aligns perfectly with CLAS's portfolio, which includes properties in these key urban markets. Another factor to consider is the evolving preferences of travelers. In 2024, travelers are expected to prioritize experiences that align with their personal values. Hotels that effectively articulate their commitment to sustainability, wellness, and authenticity will gain a competitive edge. This is an area where CLAS has been making strides, positioning its properties to cater to these evolving consumer preferences. It's also worth noting that the rise of rail transport in the travel sector could benefit CLAS indirectly. According to Euromonitor International, rail transport is expected to be the fastest growing travel category worldwide in 2024, with a projected growth of 35.6% over 2023 to 2024. This speaks to the growing climate consciousness of travelers, which could lead to increased demand for eco-friendly accommodations, another area where CLAS has been focusing its efforts. To wrap things up, CLAS offers a unique opportunity to invest in the growing global lodging market. With its strong portfolio, financial health, attractive dividend yield, and strategic positioning in key markets, it's definitely a REIT worth considering for your portfolio. As we look towards the future of travel and hospitality, CLAS seems well positioned to capitalize on emerging trends and deliver value to its investors. Before we end, I want to remind you that investing always carries risks, and it's important to do your own research and consider your personal financial situation before making any investment decisions. That being said, I believe CLAS presents an interesting opportunity for investors looking to gain exposure to the global hospitality sector through a well-managed Singapore-listed REIT. If you found this video helpful and want to learn more about investing in Singapore REITs, I've got something special for you. I've created an in-depth video breaking down the top 5 REITs that are set to benefit from Singapore's booming economy. It's packed with insights that could help you make smarter investment decisions. You can find the link